Good evening. This is the Eye of the Storm podcast and the Elliott Wave update, combining those today with the big picture technical update for the SPX, the NDX, and the futures markets, the ES and the NQ, the 30-year bond, the 10-year note, gold, and silver, along with the dollar index. I'm going to start here with the SPX. I'm beginning on the daily chart. And if you follow me daily, you know that I basically have revised the count, and the current liftoff rally that we got that began pretty much on the 29th or the 30th, I believe it was, the 30th of October, has pretty much gone vertical or parabolic, as some would say. And the market has really gone from reaching a low at 4103, 4104, to reaching a high last Friday, which was the 3rd of November, at 43.74. That's quite a liftoff, quite a liftoff to do in such a short period of time. Now, a lot of reasons been given to it. I think that primarily we got two major notices from one was from Piper Jaffray, the other one, now I can't remember who it was, but both saying that that the markets were going to move higher, that they were oversold, that many of the component stocks were oversold, and that and as far as the SPX is concerned, I think they were looking for 45 or sometimes even new all-time highs. Now, whether that actually comes in, yet to be seen. But on an Elliott Wave basis, I believe that it fits very cleanly. And if you noticed, what I've revised is the count and the labeling of the count. So we're still within, on a long-term chart, I'm still believing that primary wave be completed, and that will be at the July highs, and that occurred at 4607, basis the SPX, the cash market. And from that, I initially had labeled this intermediate 1, intermediate 2, minor 1, minor 2, minute 1, and minute 2. Well, the vertical nature of this second wave made me go back several steps to realize it's still a second wave, but it's likely coming in on an intermediate degree and not a minute or a minor degree. Now, what we're really dealing with is also, if you've been following me on just my daily Elliott Wave updates, I've been discussing a diagonal, and that is coming, and I'm again very grateful and appreciative of the subscribers that actually do come in and they put down their opinion, they put down their analysis, and I continue to suggest a diagonal triangle forming intermediate wave 1, or the first wave down from that July high. So I've gone through and I've relabeled it. And being that it is a diagonal, and that would be a triangle, I still have a slight problem with that the diagonal isn't really a diagonal. It's more of when I line up the channel lines, or just the borders for a diagonal triangle, it's not diagonal. It is just the more channel. So, but everything else fits to a T. So the launch off of this really leaves us with a position where we're looking at that on an intermediate wave 2 basis, the launch really fits the characteristics of a wave 2 or a second wave. And whether that be on an intermediate degree, a minor degree, a minute degree, they are normally characteristically found to be sudden change of direction. And this was very sudden. And then it fed on itself via the Fed. So as we came into last week, we got that initial, started to get a lift. We had a few earnings reports where they were so-so, but everybody was going to love them or just deal with them. And then we got the Fed decision. Now, so much was put into the Fed, and what came out via the financial media, Fed's all done. the whole risk on trade, or the risk of additional interest rate hikes, they're all done. And I swear that's what I was hearing and reading. And I'm like, wow, that's pretty strong. I didn't get that same message from them. And I didn't hear them say that they were all done. I heard them say that they were leaving open the potential and the possibility of additional hikes. Maybe not this year, but for the balance of this year and into 2024. So I find it very interesting how certain players and certain people reveal what their opinion is and how that catches fire. Now, from there, we just saw a massive inflow of capital again. But what I believe what we also have to continually put into play as we're watching all this happen, that, yep, the Fed may have put a good boost onto it, breaking moving averages on the way up, put a good boost onto it. Like here, we broke above this is back in the SPX, we broke up on the daily, the 200, and then gapped above it, and then gapped above the 20. And then it gained speed. And then we sort of came up to the 50. We broke above it. It gained speed, managed to close above all of these, in fact. So we're above the daily 200 simple moving average, the 20 simple moving average, and the 50 simple moving average. And what's left now is the 100, which sits at 44.03. Now, so each one of those gave it a boost. Also, zero DTE options, they gave it a boost because there was a lot of switching, a lot of refining, a lot of just readjusting positions. Now, again, zero DTEs, they get to choose where we're just going to push, and that's where we're going to pin it. And we saw a lot of that come into play. So again, it starts to really get interesting that one feeds the next, feeds the next, feeds the next, and next thing you know, everybody's bullish. And it doesn't necessarily need to fit, but in a second wave, the characteristics, it does fit, because that is where we get that sudden change. And wave two, first zone, or the first level, the fib level or retracement, would be 50%. The second most common is 62%. And that's where we sit, right on top of the 50% retracement level. And we have now also the 62% sitting up. Now, this is basis of cash, sitting at 44.14 or 44.15. We'll just round it up. That's where the next resistance line sits. But wave two also characteristically it is possible that it can retrace nearly 100% of wave one. What it can't do is it can't exceed it. If it exceeds it, it's not a wave two. Then it would be something else. So again, that pulls me back into where I'm saying, well, what we would then have to look at is the potential that what we have is an extension of that the primary B is not complete, but ABC on an intermediate degree is. Then we get an additional ABC, possibly an X, and another ABC, but that's yet to be played out. So there's a lot of just things up in the air as to what actually could the larger count be. Now, I know I get a lot of people that want to tell me that, oh, no, this is all wrong. We're going to new highs, blah, blah, blah. But they leave me one sentence comments. And so it's just like, okay. So I don't have a problem with others may or may not choose to place their competence in. But I do think that it is a wave two, an intermediate second wave. So the next line up in terms of Fibonacci within the cash market is 44.14. But if I were to count this now, I'm going to bring it down to the 4-hour chart so we can take a look at some of the internal count. It's very difficult to count, right? Because it's just been straight up. So is this wave A of two, and we're going to get a B wave and then a C wave, and still end up somewhere between 44.14, 15, and 4,500? So if we break 44.15, our next resistance really comes in at 4,500, but 4,500 to this level, 4,540. So again, we're pressing once more time. But I think that what the market needs to really put in and engage with, we've now had Apple's earnings. Apple earnings failed. They missed, but that didn't matter on Friday because they really did not take the stock down as much as they did. Initially they did, but they bought it back. And then that becomes where they're going to pin the indexes. And also where they were going to pin Apple for expiration on last Friday. So we're seeing that, if you look into here, the futures markets, so a Globex has now started, and they opened up higher, and they're now, again, pulling back a little bit. I think the S&P was up about 6, now coming, pulling back down within the first couple of minutes. So nothing really major happening within the futures market. But in any case, we're now on a 4-hour basis, and I believe also on a daily basis, extremely overbought. Interestingly, you're likely not going to hear that from any of the larger firms. And because they're only going to tell you when it's definitely oversold because they want you to come in and buy it. And not necessarily when it's oversold. Because that means it's like, ooh, they take your profit because they're going to bring it down. We need to pull back. So even on a pullback, if we're looking for this within this, again, it's a little bit too difficult. I'm going to drop it all the way down to my hourly chart, and we can take a look on the inside of this thing, and we can see it is a lot of ups. So 1, 2, 1, 2, 3, 4, 5 of 3, or up here we have A, B. None of it really. I've got to let this play out. Even if I drop it down and I put it on a line chart, I need to allow it to play out because it's been very strong. It has been. So 1, 2, 3, 4, 1, 2, 3, 4, 5. Is this A? And we'll pull back. We'll pull into a B wave. That's very possible. And should that happen, then what we're really looking for then is a pullback, but just in terms, it would be a B wave. And so we're looking for the same thing, but now going in the other direction. So we have 3A2, 50%, 62% of how it can pull back. We have 4270, 4238, 4200, 4206. So again, coming back down, what was considered stronger resistance on the way up will now be surrendered yet again. So we have the first support at 4,300 because the market had to go really through it several times on the way down because there was some strong support there. Or once that broke, then it became resistance for anything coming back up. So breaking back through it seemed pretty easy on the way, but it should provide support now. Then we have 4269, 4238, and 618, which would be pretty deep, but still a B wave. It can do it. But if this is going to be a 5 wave, then and an A wave, then that B wave could come all the way back down here. But I'm not looking for a flat because it should be a zigzag. But I definitely believe that we should pull back and then rally again and maybe end up somewhere around, like I said, that 4414 to 4500. Now that's basis the cash. Let's go over and take a look at the S&P and the index. Again, same deal, excuse me, that I've gone through and I've relabeled, and I actually showed this on last Thursday. 1, 2, 3, 4, 5. Minor degree to produce intermediate wave 1, and then we get a launch, just a straight launch up. It did have some small pullbacks along the way. So whether this actually is an A and a B, I don't know. I think it could be a 1, 2, and that's a 3, and maybe a 3 and a 4 and a 5, or 3 and we get a little 4 and a 5. Then we get a larger B wave, right? A, B, C. So I think it's going to take some time for this intermediate wave 2 to unfold. Pretty dang quick for a week for the minor A to kind of come in. So same deal here within the futures market, we have resistance at 44.03 and then 44.70. And that would be 50% to 62%. But that's why I'd be looking for the wave 2. Now, above that, we have that price resistance at 4,600, just below it. And then we definitely don't want to see it breaking above 46.21. Actually, 46.84, excuse me. So if we go right there, yeah, 46.84 being that high of the previous C wave that completed that primary B wave. Definitely do not want to see it above that, because then it's not an intermediate wave 2 correction to an ongoing downward slope. So that's kind of the immediate look for tomorrow. But the market may still have and pull in with, because of expiration on Friday, additional buying, but I'm going to start to look for that at least a pullback. We are on the 4-hour chart very overbought. We're very, very overbought, and the hourly should be even stronger. We are much stronger. We did start to pull back because the hourly is going to really play in to that. And you can see we're kind of starting to tick up. So again, possibly we've got one more little oomph to go, 4,400 getting reached, and then get into that B wave pullback. So again, wave A of intermediate wave 2. So these are minor, and then we get a minor B wave, and then we get a minor C wave to complete an intermediate wave 2. That would also be for both the S&P future and the S&P. Intraday, yeah, I still think, it's just been such a straight up move that the market's just gotten so far ahead of itself that I think we'll get to see, there should be some adjustments being made. But again, with, 0 DT options that'll be expiring on Monday, tomorrow, that they'll come into play. And so the trade has returned to that being the force behind the market and where it's moving to and where it ends up getting pinned. Okay, so let's move over and take a look at the Nasdaq. We got a lot to cover now. Not belittle any of it. We're going to go back out here. Let's take a look at that daily. We can come in on the daily. The same deal. Exactly the same deal. In fact, this is the one time where I actually went through all of the charts, and every last one of them is doing the exact same thing. So, which kind of leads a lot of credence and support to this being actually what's happening. Very rarely do I see where, they're all pretty much exactly the same, but the Nasdaq and the S&P, simply because they share the Magnificent Seven, number one, and quite a few other large tech titan companies, that their moves should be reflective, very, very close to each other. There are often times, though, that part of the S&P 500, there'll be a stock that is not in the Nasdaq that's either getting really purchased or getting really hit. And so it does fall a little bit out of sync with each other, but that's normally just on an intraday basis versus the longer term. So, and NDX, minor 1, 2, 3, 4, 5, intermediate wave 1, that's going to be again on that low from the 26th of October, and that it was at 14,058. We reached, this is just really blows my mind. We reached a high at 15,149, but I'm going to say 15,150. So pretty much in a week, this market has gone 1,200 points. That's an incredible rally. I'm hands down. I mean, everybody say, "Oh, I'm just a perma bear." No, actually, I'm not. I'm not a perma bear. And I'll be the first to say that was an incredible push higher. In fact, the gap between Fed day, so between Wednesday and Thursday, was quite impressive. I was like, well, not because what came out was additional. Well, the Fed's all done. Fed's done. Interest rate hikes are done. I swear, this is what I was reading. And to me, it's like, wow, that's kind of silly. But that's what they're doing. And so we get even a greater cover the short or cover whatever and go long. And we see all this capital come in. Now, again, tomorrow being the first Monday of November, we may see more capital coming in. I kind of felt maybe that actually did come in on last Thursday and Friday. Fed number, and then we got that gap up on Thursday. And I believe a lot of that could have been the new money coming in for the month. So remember, the first week of every month, you get the inflow of capital from 401k and from IRAs. And yep, they're still doing it. And yep, they're still getting bigger. So yep, there's still a lot of money out there. And we already know that there is a ton of money sitting on the sidelines. If they decide to go like, okay, we're going now. This is all, and they come back in, I think they're playing into the hand of somebody and not necessarily into reality. There are really too many things, folks, still out there that can upset this apple cart in about 10 minutes. Many, many things that still can just flip this market and to just jump back in because you're either your fear of missing out or whatever's in control at the moment, I think is kind of raises the risk level a lot. But as I've said many, many times, I am a day trader. So I don't come in with a position already established, and I only trade for the day. So I don't carry any positions overnight. Now, yes, I was I am an ex-market maker. I was an options market maker for many, many years, and of course, carried positions. And you get that going, but even the way options trade now has changed dramatically from when I was a market maker on a trading floor, and I've traded on several. So things have changed dramatically. First of all, it's all electronic. And second of all, a lot of things move a lot faster. And because it's electronic, everything comes in at the market. So you might bid for certain things, but you get left behind if you don't just go in and buy them. So it seems. Options a little bit different. Okay, so but back to this on the daily. So we've got that strong move in the NDX, including the gap. And so what's in store? Well, we're sitting just below. We made it above the 50%, which is the most common. In fact, we gapped above that, or no, we didn't. We reached that level on Friday. So, and just kind of, we gapped slightly just to below it where we opened, and then ran above it, heading for the next level. Most common 50, second most common 62%, which sits at 15,216. Now, I would suspect that that level is going to be reached, but the same thing applies here. The market is extremely overbought. One would think that we're going to get a pullback. Now, on the cash market, I could go 1, 2. Oh, you're really hard pressed to put where the 3 and it could be, but I think 1, 2, 3. I don't think this is A, B, C. Could be 1, 2. See, there's just such little thing. Even if I drop it down and let's take a look at the hourly. Right, that's 1, 2, possibly, then a 1, 2, and then a 1, 2, or this together is wave 1. 1, 2, 3, 4, 5. Also kind of a diagonal to start our wave 2. And then we get an ABC for wave 2, and then 1, 2, 3, 4. This is where it gets hairy. You have to put 3 and a 4 and a possible 5. So there is a possibility that we have completed or nearly so. It's hard to say whether it's going to be A, B, and this is a C. If it is, then we're getting very close to finishing wave 2. And you could think that way because we're reaching up towards the resistance levels for it. But I'm thinking we're intermediate degree. We're likely going to be wave A, then we get a B wave, and then we get a C wave. And this is going to take longer in time for this all to unfold. So I think we bounce back and forth for a while as we play out in this. Again, last week, strong upside. We might get a little relaxation, get some adjustments, and just some trading. But people always say, oh, I'm going to take my profit. I'm going to work this, or et cetera, et cetera. But it's still, we're getting additional earnings reports, and some of those stocks might have an effect on what happens in the market. Magnificent Seven, I think what we got left is NVIDIA. And I believe they report on, let me see if I can pull that up. Let me look here. On the 21st. So they don't report to just before Thanksgiving. Now, that's a little bit a long time to wait. But you best believe that that's going to be the play. I mean, AMD had their earnings, and look what they did. Came back, and they're still buying the crap out of the stock. This stock, the earnings came out, and they drove it down to 93. And in 2 days, they got it back at 112. And these are crazy moves, folks, crazy moves. And I think so much of it truly is due to options trading. So as long as those options continue to trade as volatile as they are, because remember, volatility in an option translates to premium, and that's the name of the game. If you're a market maker, premium is the name of the game. So could be an interesting day, could be an interesting week. We shall see. But we have support now at 14,995. So basically 15,000. And we have resistance at 15,216. Break above that drives resistance to price-wise 15,345, I'm going to call it. And then we have fib resistance at 15,531. Those are in the cash Nasdaq market. Looking at the futures market, pretty much the same deal. Here I have marked AB, and this could be a C. So whether that's still going to be just wave A, I don't think so. So I think, but it could be. It actually could be. So an ABC for A really does put it into where it could produce a flat versus a 1, 2, 3, 4, 5, which is then puts it into a zigzag. So this is what we got. You know, the futures market tells me one thing, that the cash market is a little bit different because this trades, you know, off hours and in between. And so the patterns sometimes can become a little bit more clear. So but I'm going to let it all play out. Any pullback, though, here's our support. We got to support 14,944, 945, somewhere up in there. We have support at the 20 coming down, which is at 15,051, then 15,000, and then down to 14,945, 950. So we have continued support, and once I get indication that high did complete wave A. So we're looking for minor A, and that's why these are minute. So if it's an ABC minute, that's a minor A, then I'm looking for a minor B wave. I can put in the retracements. So wave B are just going to be retracements of the wave A. Then once I get that low, I can then put extensions in for wave C. So the fib extensions. But we're now just going to have to play it day by day to see what the market wants to do and how it wants to go. Parabolic, I think that may relax a little bit just because we are so overbought, and that needs to be pulled in, needs to be corrected a little bit. Okay, so that takes care of those two. I will wait, and the IWM, let's just take a look. Just because I'm here, I do the Russell. I did, but let me just pull this out. Looking at this one on the daily, same deal. Here we have the beautiful triangle for primary wave B. And so same deal. Again, it was a little bit more on the confusing side, but this is very clean. This is a straight 1, 2, 3, 4, 5, intermediate wave 1. That was not, that it was a diagonal. And it kind of looks very much as you know, it kind of just careened itself back down into that, but not necessarily. Very clean 1, 2, 3, 4, 5. Intermediate wave 1, right? In an intermediate second wave. This is the cash market, the cash Russell. And so we're going to just put some fibs for wave 2. We've only reached 3.382. So is that wave A? Maybe. But then where we have above it, so we have a 1775 is in the cash fib resistance. That's also where we have the 50 period moving average, the daily 50 simple moving average at 1776. Then we have the next level of fib resistance at 1818. And then we have the 200, the daily 200, important, at 1833, and then the 100 at 1843. I think eventually those are going to get broken as this wave 2 continues up, because we have first for second wave 50%, that's 1818, and then next one, the most common, second most common, is 62%, which is 1862. Both that includes breaking all those moving averages along the way. So, but I think it should come in as an ABC, and then we have that'll put an intermediate wave 2, and then we've got an intermediate wave 3, and that's where the damage will be done. I mean, I was looking for it a little early, and I just needed to relax myself a little bit and realize, hey, it's got to play out, and you're in intermediate degree. That puts a lot of emphasis on what's coming, because if you remember, I continue to discuss that I'm not seeing this strong downside as I should if we're in these types of waves. Okay, here we are, IWM. So our RTY is going to look pretty much, because I don't necessarily have anything going on in the Russell future, but it's going to follow, of course, the cash market. But the IWM is very heavily traded, very, very heavily traded. So here we have a couple of things. We've got two indications. This fib extension is for down here. It is the primary C wave. But what we got going on in between is we have an intermediate wave 2. So here again, strong gapping. You know, initial exhaustion, maybe. Then we get a B wave, maybe. So is this, you know, that this is the daily. So here again, we have the 50 simple moving average at 176. We have fib resistance at 180, and that's the most common for the whole shebang, so the whole process. And then we have the 200-day moving average at 181, and the 100 at 182. So they're almost like kissing cousins right there. And that gets broken, we should launch straightly up to 184, likely possibly higher, depending on what might be going on in the market as it gets there. So, but again, intermediate degree. So what am I looking for? A minor degree A, a minor degree B, and a minor degree C. So I think this all takes a little while to totally work itself out. That's IWM. All right. Done with those. I'm going over to the bond market. Also, incredible market. Now, initially coming into the Fed, I ran both scenarios, a bullish and a bearish scenario. Yep, I did it, folks. I put on a bearish scenario and also a bullish scenario. Instead of one that's going down, one going up, that's what I did call them, bullish and bearish. I don't necessarily take those when I'm trading, but when I'm doing the analysis, I did. So here we are in the 30-year bond. 30-year bond put in a strong rally right along with the equity market. Now, I don't need it on the daily. I got to bring it down to at least, oops, not that daily. Oh, there is the daily. So, but I want to take it down to that 4. Oh, yeah, I can do it here. What we have is we have the high back in August of 2020. So that is the cash bond high. All right, so the bond price high. It also equates to the yield low, and the yield is 1.17. That's what it was in August of 2020. Now, from that level, if that was the high, and I'm going to be looking for 5 waves down. And that to me is just going to form an intermediate degree, because I'm labeling this as primary wave 5. There's going to be others that are going to label it much differently, but because of where I'm jumping in, I'm calling it a primary 5. So I'm looking for an intermediate degree ABC to form a primary A wave. Okay, so I'm thinking that we got a 3-wave ABC long-term corrective phase going on here. So in the bond market, I do think that what we've now completed is wave A down, intermediate degree wave A down. This low is 107.04. This high is 182. What a decline. Now, interest rate, it went from 1.17, the low, to 5. I'll tell you. I think it was 5. No, it was 5 point something. It was 5.1. I think we did get to. No, 5.064. So basically we got to 5%. So from 1.17% to 5% in 2 years. And really we started to see those rate hikes. So again, going back to the futures market, what we're coming into, and I can drop this down. Let's take a look at the 4-hour chart. And we were looking for a minor 5th wave, which extended beautifully. I mean, really extended beautifully in terms of Elliott, but confusing, because for a while I was thinking, well, maybe that could have been it. That could have been the whole shebang. But then we went up in a 4 and they nosedived this thing on the auction, the last auction. So they're actually thinking that this auction is going to go a little bit better. So what could really upset this apple cart and once again produce a negative picture is that the next auction goes really poorly. We don't see that international participation where they're coming in, giving the Treasury Department dollars that the Treasury Department needs. So our refunding is to keep the government functioning, to keep all of our services monetized so that they have money to operate. But we borrow that. So, and a lot of that foreign participation is because the credit rating for the United States is pretty high. And so they're thinking the good faith and credit of the United States is still strong. That may or may not last. So I think we're buffeting up against well, now next up is, I do believe, those refunding, those auctions. And we see how they actually come out. And the most important will be that 30. So, but in the meantime, I actually am labeling this as complete. And the movement that we saw last week, let me take it one more time, then down to the hourly chart. That movement that we saw last week was pretty dang strong. So we had all of this, which kept me giving both sides of the picture. Either it's bullish, and this point, 107.04, completed the minor wave 5, the minor wave 5, and the intermediate wave A. Or it really was just completing a minor wave 3. And this is going to be minor wave 4. And actually, we had it all the way. It could have just been this tangled mess. And then we came down to 108, and then suddenly it just launched. Still could have been in its mess. Then it launched. Still could have been in a mess. So it really, once it started to break above this level, 114, that's when I'm like, okay, I'm sticking with the bullish, which is that we're in an intermediate B wave counter trend rally. Okay, works for me. We'll see. So with that in mind, it's going to be a minor A wave, a minor B wave, a minor C wave to form intermediate wave B. And it's going to be counter trend. So we're in the very beginning stages of it. And we're in the beginning stage of putting in likely either a minute A wave, and that's looking like it could be 5 waves. That's how I'm kind of counting it out. So we have minuet wave 1, minuet wave 2. And again, if it's the degree could switch. But right now, I'm just saying this is a wave 1, this is a wave 2, we've got a wave 3, and we're pulling back off of that wave 3 to put in a wave 4. First area of support and most common for a fourth wave is 38.2%, and that's right here at 112.14. We kind of slid down pretty quickly into the close, into the last hours on Friday. So we dipped below, and now we're trading a little bit lower. We're down another 14 ticks. So again, A, B, C, bring us down to here, put a 4 in it. And we also have support from the hourly 50 simple moving average, which is at 112.11. So we got support 112.14 down to 112.11. A break there sends that support to 112.20, 111.22. So again, being that it's probably a fourth wave, so where does it start to really break down? Well, we'd have to really come down and break this level, 120, 110.15. If it does that, this gets left as 3 waves up. I stick a 4 on it, and all of this gets taken off. And we're back into a downslide, likely going to end up around 104. Okay, we have to, we'll redo a lot of the fibs coming down, but the major one is from where that minor fifth wave, reaching 100%. That was of the previous, and that's at 104. So that one would remain alive. I've taken it off for right now, sticking with the bullish count for the moment here. Now, 10-year note. Kind of the same deal. Got to tell you, same deal. But boy, this thing, 10-year, just look at the launch there. This is Friday. Just kind of went. And also broke above the 108.165, which kind of, to me, put a very strong undertone to this low. And it's just with the lower low, but the official low is 105.125. This is 105. And so a little bit higher, so tiny little failure, nothing really to get too shook up about. So I have the minuet 5, the minute 5, the minor 5, and the intermediate A. So here we're working minute degree. Not minuet, but I'm working minute degree. So if I put a minute wave 3 here, it could be a little bit tough, but doable. 1, 2, doable, but depends. If I put a 3 there, where's the 4? 4 is going to come in here. This would have to be the previous. And I'd be looking that it's going to come down this far, which is 107, down to 107.085. And I'd really be looking for 107.2 to kind of contain any downside. Right now we have support at 107.310 here. And the next level up would be 109.8085. Now that would be to finish minute 3 if this didn't. So interestingly enough, we'll see how this all plays out. But again, in both the 10-year note and the 30-year bond, I am looking at those markets as they have completed their initial an intermediate degree A wave down. So their initial, I got to take this all the way out. Let's go to that 5-week. The initial decline. So here again, at that high in August of 2020, the interest rate was 0.69% in the 10-year note. Now, let's go take a peek as to where that 10-year note just topped. And we're going to go right there, and I'm going to look at that high right there. It topped at a 5%. That within 2 years. That's a huge percentage-wise. That's a huge push in interest rates. That's why we were like hitting the skids, kids, because the market was not going to be lending money for 1% or 2% or 3% or 4%. They had an interest in lending money at 5%. And you can see that what's just on a weekly basis, the market hasn't really, that's 5%. What did it get down to? 4.5. So it lost a half a percentage point, which is pretty strong in a yield market. And a lot of money in between there. But here, see, they kind of start to tick it up a little bit. So again, we're walking a very fine line here within our interest rates, a very fine line. This very well could be 1, 2, 1, 2, 3, 4, 5, maybe A, B, C. So we got a lot of work. So if this is the complete, then we're really looking for these to come all the way back. I go back over to the 10-year note, and we can see in terms of it's got to come all the way back. We have a lot, and these are the fibs for, let me go out to that weekly again. These are the fibs because, again, right, we're looking for an intermediate B wave, counter trend rally. That's where we take our retracements from. We got to look at the entire A wave decline. So 236, 124, 382, 136, 50%, 144, 62%, 153. Most common, 136 to 144. We're talking about, we were down at 107. So that's a huge move back up again. Now, minor wave 4 was at 134, and that was back in April. Back in April of this year. So we went from 134 down to 107 in 6 months. So it was incredible. So what can we do for the next 6 months? Can we get back to 134? Yeah, very, very possible. But so many other things have to fall into place. So many other things, like inflation, non-existent, not going to happen anymore, totally under control. Do we believe it? No. Wage inflation is still a strong possibility. Why? Well, because people that work for these corporations that are making all this money need more. So again, lots of stuff going on, which could stymie both movements in the bonds and in the equity markets. All right, let's go over and take a peek. Gold finger. The weekly chart really has not changed. We're still sitting between needing to start to put in our next strength to the upside. But the market needs a little bit something else to peg it to. Otherwise, it's stuck on the dollar. Okay, so we saw some strong declines in the dollar, and I'll go over that in a minute, which kind of prompted gold. But I think that gold continues to hold. We got a lot going on in the world. And one thing that that gold really reacts to is conflict. And with its military conflict, gold becomes a safe haven. And that would be on an international basis. People will put their money into gold just to keep it safe, to keep their wealth safe. That's just the way it is, folks. So right now, what we're seeing is we see a lot of that movement going into gold. So people are asking, will gold go to a new all-time high? My answer is yes, I believe it will. And I think it could happen very quickly. We're in my estimation, we're in a fifth wave. I'm calling it a minor fifth wave. If I pull it out to that daily chart, we have our next up is where this wave would be 100% of, I got it, comparing it to something. Let me go back. Let me go out to here to see where I've got this one going. Let me go out to here and see where I've got this. Oh, if this is a wave 4. So minor 5 when compared to minor wave 1. Okay, so there's minor 1, and that's back into 2017 to 2017. Minor wave 1 was put in. So now we're in minor wave 5, And that's what I've got in terms of extensions to really compare it to. 5 compares to 1. So I've got 6 years in between there. So, but nonetheless, these are the fibs. And so bringing it back down to that 4-hour chart, what do we have? Next up on a fib basis is that where minor wave 5 would be equal to minor wave 1 in length at 2061. Well, the high is 2086. That's not even basis the December contract. Basis the December contract, that high is, it's really kind of weird because now they did make them. Depends on which chart you pull up. I've seen it where it's been like 22. So let's go here. And if I go this way, yeah, it is. Now it's a lot lower, but I'm looking for, I'll go back out to my 4-hour chart, dang it. Okay, so this is where we have 2086, which is the high from May. 2089, I think, actually was the high. But we'll see. Maybe they've made all these adjustments now. And so I would definitely, 2061 would be where 100%. I think if it gets up to there, it should break that. We should get up closer to 2100 and above. Fibonacci basis wave 5 would be equal to 1.618 times the length of wave 1 at 2208. I do believe we'll see that. And then by then I should be able to put in some additional because this 5th wave will really begin to develop out. Now, if I had to look at it, this is a nice 5 and we're just kind of walloping around, sitting in ourselves, not really doing a whole lot. It's kind of like sitting in a consolidating period after reaching a high at 2019. And a B, maybe come back down. Maybe we slide back down to 1970, which should be support, and then launch another rally or anywhere in between, to be honest with you. So I still hold pretty strong upside potential for gold. Silver, read some articles in silver that it is definitely being held back by something, and it should likely play catch up because if we're looking at that the producer pool, that there's a lot of demand for silver as it's used in, if solar picks up again, it's used in the production of solar panels. And so if we see that really start to kick in, then silver should ignite. Now I have silver in an intermediate second wave, or actually, excuse me, third wave, but really off to a slow start. So if anything, I got a 1 and then an ABC for a 2. There's on my daily chart and should start to launch to get itself higher. So even if I'm putting it onto there, 618.32, 100% 39. Wow. And we're looking silver some very high levels. But I think if we're inside this intermediate third wave, it should be very dynamic. This should catch fire, stop this triangular looking thing, and break, and really break. I mean, the only other thing I could do is like A, B, C, D, E, and then I'll launch. But as far as a wave 2, yeah, that's kind of very strange to me that it would do that again. So silver's lagging, but I think it has pretty strong prospects on the longer term. And then finally, let me just finish up with taking a quick look at this dollar index, which saw a nosedive. This is a nosebleed dive last week. And so we were touching. Let's just take a peek. We got up to 107.113 on the 30th of October. By the end of the week, let's go down to the 4-hour chart. By the end of the week, well, it was like 107 right there. And here we were at the end of the week below, pushing down to 105. So it was a very large sell-off. But here I am on the 4-hour chart looking at this thing, right? Because I'm counting a C wave up. Let me go back out. Counting a C wave up to complete a minor wave 2, and then begin a minor third wave down, a 5-wave structure down. A sell is down and down and down. And I would suspect that the dollar goes under par, which is 100, and breaks 99.58, which is the low from July, but keeps going. And we can put targets in. And again, that's going to be going back out to, let's go back out to that weekly chart. It's going to put targets in, but we're talking that the dollar was trading at what? 89 back in 2021. And if I'm looking for a minor 3, or at best an intermediate 3, both pretty big, and that's just saying that this all fits. I think it's only really going as far as that we completed an intermediate C wave. And so what we're likely working on is the next intermediate wave, and it's going to the downside, and that's going to be an A wave. So is this A, B, and then we're just getting a C wave, which could bring us back down to here. So I've got that. I got a couple interpretations where this is just a 5-wave A, minor A, B, C, minor B, instead of a 2. And I may switch it to that because it kind of pulls in expectations of how deep the dollar should go. So many things are playing out at the same time. So just to think that we have this massive collapse in the dollar in and of itself, by itself, yeah, it's possible, but not necessarily going to happen right at this moment. But I am thinking back down. Let's take it back to that 4-hour chart. Looking at it here, that what we've got is we're now working through a C wave, but as a part of all of this, A, B, right? A, B, it's a lot of 3s. And now this may be looking like we're going to get a 5, a 3, a 3, 3, 3, 3, 3, and then a 5. So it still just presents its challenges to me. And when I pull it all the way out, it could be a 4. And we still need one more intense rally back up. There are things that could do it, that really throw this and turn this right around and come back. We haven't seen it. We've seen much stronger selling right now, which again, Fed induced. Fed's done raising the rate. We don't need these dollars anymore. And bam. So much goes into the picture, which is why I think it's a 4. Or, a wave 4. 1, 2, 3, 4. And we go back up and do one more time and then do a larger collapse. Or this is it. And this somehow is a 1 and a strange 2, and we're dropping. So those are the 2 scenarios that we got. If you're a dollar trader, follow the bouncing whatever. So this is where I'm going to complete it for today. This also will go along for the Elliott Wave update for tomorrow, since I went over both of those, the Nasdaq and the S&P. So the next update will be the Elliott Wave update, and that'll be on Monday, November the 6th.